Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature, none of it is relied upon as any form of personal advice. FP Markets does not know your personal scenario, nor your personal financial goals, and therefore none of it is relied upon as any form of advice at all. It is just general in nature only. Let's be honest, central banks have lost control of inflation. That, I think, is a given. And we're seeing that in the pricing with regards to where markets are now at. They are saying very clearly that they don't believe that they can catch the inflation knife at the moment, or should I say inflation cliff, because it's going upwards, and also not cause some form of recession into the future. That is also what's coming out of this whole debate and why markets at the moment are being absolutely towed up where they sit. You look also at what happened in the inflation read last Friday to really understand that tomorrow, leading into the Federal Reserve, that 75 basis points is probably the most likely scenario, but it's also, do they say that I'll do it again in July? The speed of which this is happening is also catching so many people off guard. Because the question therefore is, although on the pure economics it makes sense and there is certainly spare capacity to get through this whole period, we know about the savings rates across the globe, that's all well and good, but psychologically it's not. Psychologically it will change a lot of people's behaviour. It is such a shock to go through this kind of increase at such a rapid rate. And therefore, the market believes they can't do it. And that's why the recession pricing is coming in so fast. Have a look at the 2, 10 and 30-year bond in the US on Monday when it reopened. It was actually literally flat. The 2, 10 and 30 were exactly the same yield. It almost inverted. That is forecasting the recession we're talking about. So it means the USD is certainly the one to watch, and it is on a tear, 2-decade high, and there is no signs of it slowing down. Carry trade is well and truly going strong. Have a look at dollar yen. That's an incredible price to be seeing at it, and it would make Hikito Kuroda very, very, very worried, even for what he normally does in this space, because if it gets towards 145 or even, God forbid, 150, he will have to really think about it, because the impact on the Japanese economy of having a yen at that level is really, really hard to work out how that's going to continue to help them, although it hasn't in the past, grow their economy. So that is why, leading into the Fed, everybody is asking the question, is it just tomorrow or is it for July as well? Do they continue in September and also in the next meetings after that? Certainly seems possible. And does this whole shock and awe campaign get inflation back into control? The question is unanswered, and so far the market believes they've lost it.